So alright guys, welcome back to the continuation video of the liquidity that I was talking about. So in the previous video we talked about the buy sides for the liquidities you should look out for. So on this particular video we'll be talking about like the sell sides. I already explained things initially, so this shouldn't be some kind of confusion. It should just be a walkover. Let's do this. So for this particular video we'll be having markets giving us the kind of patterns that we should look out for the sales of market structure in relation with liquidities. So now let's do this. So now we can have market creating a high, the market creates a low, and the market pushes up price, right? To the high area that I started from the start of the trend. The market retests down to create another, a lower high area. Market breaks structure nonetheless. Market pushes up price back into that area again, and it pushes down to break structure. Now automatically these two areas are actually liquidity areas. The market to then come and kill these two areas only for it to push up price into this singular one that is here and actually sell. Alright, so automatically these two ones that are here represent your structural liquidity zone. Alright, then you have the high that is here, which is basically where we're expecting market to sell from and push down price. So right, if you are looking at this trade, we'll be having something like this. Market creating a short like this. Basically means that this is your low, and then this is this. The stop loss will be sitting down around this high. You start out the trend. So now on this trade, you'll be risking about 29 pips to get about for a straight line. So now let's look at the chart representation of what I'm talking about. Let's go to the chart. So for the charts, you have market basically showing you this. Don't forget, on this chart also market broke structure here. So automatically we had a break of structure here, right? Then we had another break of structure here, which is two break of structures. Alright, so this is the second break of structure sitting down here. Okay. Again, then what then happened? Market created these two areas. Don't forget, this is a one trend break of structure. This is another break of structure. Automatically, these are two lower high areas actually, right? But market got there and created a liquidity zone. Then what market did? The market started pushing up price, pushed up price. Now, when it pushed up price back into this liquidity area, it created a pullback by selling a bit. It is called fake out, just like I was explaining in the previous liquidity video. So it created a pullback like as if it was going to continue the sell from this liquidity area. But no, what it is instantly, it pushed up price back into the singular lower high that is here. And then we had an instantaneous reversal all the way to the downside. And this is market moving about 229 pips on the sells, risking 46 pips for the stop loss. So now you would have retained the stop loss around this particular high that is here, and then you would have market reacting there. So this is a breakdown video on how you can be able to look at your market structure for the buys. Then the liquidity area represents areas that you have to look out for, so that you don't get caught up in irrelevant stop losses. So that way you ensure that if you are looking at buying, you are going to be retaining your stop losses at the low, right? And then you have your entry at the higher low that doesn't have a liquidity area. Then you expect market to sweep up the liquidity area and then buy at the higher low, retaining your stop loss at the low that started the trend. Then for the sales, you would have an instance like this where market to create a high, retaining that high, right? Then you have market then push down to create a lower high, then create a double lower high, like where market will basically sweep up the liquidity area that is there, tap up price into the one that is existing, which is the singular one, which is the singular lower high area. Then you can expect an instantaneous reversal all the way to the downside. So this video basically sums up, we showing you guys market structure, right? So market structure that you have to look out for if you plan on buying, and also market structure that you have to look out for if you plan on selling. Core things you also need to pay attention to are liquidity zones. So liquidity zones also represent areas where you should avoid, even if they have higher lows where you're supposed to buy from or lower highs where you're supposed to sell from. You don't just basically buy at every higher low or sell at every lower high. The liquidity is responsible for letting you know which higher low you are supposed to buy from or which lower high you are supposed to sell from. So this is a sum total video showing you the market structure for buys and market structure for sells, and also liquidity area for buys, showing you where you can buy from exactly, and also the liquidity area for sells, showing you where you can sell from exactly. So we hope this video has been able to help you guys on how you should be able to see the market differently. And if you are consistent with this and you're able to double down on this, you should be able to at least attain a certain level of profitability. And whatever you find yourself doing, try to double down on it. I will see you guys on another video. Bye for now. And don't forget to hit the subscribe button if you've not done that already. You can just basically search for TLC Banks to basically subscribe, or also share this video to somebody that you can share this video to. And don't forget to trade responsibly. Don't get your accounts blown. Bye for now.